starting with Priceline, which is a provider of travel and restaurant reservation and related services.
So you'll be familiar with their websites, booking.com, Priceline.com, which is kind of like a knockoff of Booking.com, Agoda, which is an Asian-based travel website, and then things like rental cars and Open Tables, which is used for booking restaurants in big cities.
Market cap here, $67 billion,
Exactly.
a PE ratio of 26.5, paying no dividend. I was surprised by the size there.
Exactly. It's a big, big player. And of course, they incorporated things like Kayak, which is a travel engine thing which allows you to find the cheapest airfare from one destination to another. Plus, you can book your hotel, as I'm sure people are aware, as well as book your air ticket right through booking.com.
So you must be familiar, Joseph, with booking.com, the website.
No, certainly. I think that's the way, given obviously the fact that we're all very busy, but we've got nice tablets and all these gadgets that allows us to be doing all our activities online. But if you look at it, I mean, it's a global business. If you look at it, from a PE perspective, it does look expensive. But I think if you look in terms of the return on equity, about 30, above 35. You look at the net margins at 27%. So certainly, I think they is doing well. But I think if you look from a relative perspective, you might think it's expensive or the valuation's a little bit overstretched.
Let's have a look at the share chart.
Let's have a look at that share.
You'll see it's done well. It's had a bit of a lift off here towards the end, but over multiple years it's done fine. It's got a high share price, $1,345 for one share. But remember how the business actually works. If you own a hotel, then you pay Booking.com to have a good listing there. Plus, you obviously pay a fee away to Booking.com if you get a reservation through the Booking.com engine. Many hotels have realized that it's actually a better place to sell their beds than it is to actually try on their own websites.
That's a high share price of $1,347 per share. Do you know that we wouldn't even be able to buy one share or even a fraction of a share?
Yeah, I was actually reminded when doing my preparation that I do actually own some of these shares because my colleague Sasha Narishkin has always loved this company. In a way, I always think of these online services, those like, it's a bit like buying Google, but for a specific part of the internet. In this case, the tourism vector or the tourism
Since you
side.
did your homework, do you remember when you bought them and whether you've made any money?
Yeah, I'm up about
one?
30% on them. So I think I must have bought them in that run up in 2014, 2015.
Oh, 30% is not bad.
Yeah.
Hot or not, Joseph?
I mean, if I was just going to comment on the price. If we were to consider that we complain that Naspers is going towards 3,000, imagine $1,500.
This really puts context around our discussion.
You have to put context into that. I think I'll keep it hot. I think it's a good quality business. A little bit from a PE relative basis looking expensive, but certainly if you look at the margins, the return on equity, and also it hasn't dipped from its highs as much as the others have. So it's a hot.
Paul?
Yeah, I've used them both for hotel bookings as well as travel bookings. There's some funny third world airlines, like if you're traveling in Chile, for example, where the website doesn't work because it's like a Spanish problem. Then you book through Booking.com, all those problems go away. You make the reservations, they make money on all of those sorts of things. Its competitors are TripAdvisor and Expedia, but I think this is the largest, and if you like that space, definitely hot for me.